lot of people first heard about Bitcoin in maybe like 2017, and they thought
Mhm.
it was going to go away. It didn't. Then
Nope.
they thought, okay, surely it must go away this time. It didn't. I mean, think about how many times the Peter Schiffs and Peter Zahans and have been wrong, right?
Mhm.
Something is clearly going on with this Bitcoin thing, right? And I think a lot more people are realizing that.
Lately, you have been seeing kind of a shift in sentiment, I would say, between a lot of these firms. At least it seems that way from some of the messaging that you're hearing from, the BlackRocks of the world. Like you've kind of have a ton of different examples of this over the last, say, 6 to 12 months. What do you make of that? I mean, do you think it's for real? Do you think they're finally starting to accept this? And then why now? Like, why do you think these
Yeah.
institutions are finally starting to get it?
I think it's a big deal. I mean, BlackRock's not just getting interested in Bitcoin and the space. Like Chair Larry Fink said, it was part of a flight to quality trade,
Yeah, yeah.
which I think is a very, very strong signal and endorsement of Bitcoin's role in an investing landscape. Frankly, more bold than I even remotely expected. I think than he even like I thanks. Larry, like, that's
Yeah.
incredible. I think we agree
I
with
know.
that, right? I mean, I think
Yeah.
Bitcoin believers agree with that. I think the market infrastructure has matured significantly. I mean, you've got qualified custody, you've got, institutional lending and trading and prime brokerage and accounting and a whole bunch of things like that, right? That did not exist when certainly in 2015 when Fidelity first started looking into it, but not in 2017, not even to the same extent in 21. You've got so that all makes it more possible, I think, just generally for
Mhm.
folks to get interested. Institutional players, like in the case of BlackRock, right? We're talking about asset managers. I think there's also demand. I think people genuinely, I think over the last year, right? I mean, FTX collapsed about a year ago. I really think a lot of people in the traditional world who may have, whether they were interested in Bitcoin or not beforehand, were genuinely shocked that Bitcoin is still around
Yeah.
after the year that the markets had last year with all those blowups. So, and it is still around. I mean, Bitcoin was up 100% off a base of like 16.5 at the start of the year. I think now, or maybe call it 110%. It's objectively one of the best performing assets in the world. That speaks volumes to people. And then you look at also the regulatory environment in the US. Like there are some tricky complexities about regulation. Most of them, I would say, apply to other parts of the cryptocurrency industry much more than they do to Bitcoin. But there are some things that touch Bitcoin, whether it's FinCEN or AML KYC related stuff. But broadly abroad, the picture is very different in EU, in the UK, in the Middle East, in Hong Kong, and some parts of South America, and in some parts of Africa. It's much more permissive and also clear, right? I mean, the EU is not more permissive, but they passed a comprehensive plan for how to deal with digital assets like Bitcoin. So there's businesses know how they can operate, right? There's still a lot of uncertainty in the US, but I would say a lot of that uncertainty doesn't really apply to Bitcoin. And I think over the years, it's become very clear to institutional and global macro investors that Bitcoin has a role to play here. And many of the macro investors trade Bitcoin in some way, right? Even Stan Druckenmiller, like last week with Paul Tudor Jones, said, I don't own any Bitcoin, but I should,
Yeah, probably should.
right?
I
Like
probably should.
I think there's just a growing recognition that it's here to stay. It's global. It's like a commodity. It's in many ways uncorrelated. Even if I don't, it's been uncorrelated from a performance standpoint over time, but it's fundamentally uncorrelated, right? It's an independent, decentralized global architecture, et cetera. So I think there's a lot of reasons. Part of it is the maturing like market infrastructure is a big part of it, but also just it's time. I mean, the thing has been around for a long time. It didn't go away when everyone said it would. Like, and this is now what, like, a lot of people first heard about Bitcoin in maybe like 2017, and they thought
Mhm.
it was going to go away. It didn't. Then
Nope.
they thought, okay, surely it must go away this time. It didn't. I mean, at some point, like, you can't say the sky is falling over and over again without it actually collapsing. Otherwise, you have to believe it's not falling, right? And I think we're really sort of at that point.
Yeah. I want to double click a little bit on the market structures maturing. I'd agree, especially when you compare like the current market structure to say 2017, 2018. It's matured. But at the same time, last year we saw a lot of the big players get wiped out. At least the ones that were big players in 2021. We saw a lot of bankruptcies. We saw Ponzi schemes blow up. Um, do you think that's part of the maturation process where those big players like the FTXs of the world, like the Genesises of the world, there's just going to be a new players that kind of fill that hole that was left from those organizations? And do you see that as part of the maturation process here?
I think it is part of the maturation process. I don't. I wish it didn't have to have been.
Yeah,
Obviously, I don't think it was healthy that those things occurred. But now that most of those are resolving or have resolved at this point, I think that is positive that they have.
definitely.
I think the players that you have now, whether they're increasingly traditional or, you know, the way I like to say it is like they're. I think Joe Bankman said on the stand in the case, the Sam's case, that he was the adult in the room. There was evidence from
Yeah,
emails where he
yeah,
said,
little
"Oh, guys,
guys.
I'm the adult in the room." Yeah, I mean, there really wasn't
Yeah,
an adult in the room, and there wasn't at several of the lending firms either in the sort of figurative sense. And I think, the firms that are still around, like Galaxy, to be honest, are manage risk actually, right? Some
yeah,
of the firms we talked about, I mean, if you read the Genesis lawsuit, the NYIG has brought, there's some pretty devastating stuff in there that just like you wonder how it could have possibly been true.
yep.
Um, a lot of those firms, I mean, they got their comeuppance, right? They're either bankrupt, they went out of business, they got acquired, et cetera. So I think it's objectively cleaned up a lot. I mean, I will say there's more liquidity that is needed in this market. I mean, that like significant liquidity has been drained from the market compared to 21, given that so many players have exited, right? So I expect now you'll see more traditional players enter. If you look just at the applicant issuers for the ETF in 21 compared to now, they're significantly more mature, right? I mean,
Mhm.
you had some like Fidelity and Invesco Galaxy that, are either large ETF issuers or in our case are partnered with one in 21, but you didn't have BlackRock, right, which is the largest. You didn't have basic sort of major institution. People had sort of written off Fidelity here because they're like, "Oh yeah, look, Fidelity's had that as like a hobby horse for all this time," right? It's like,
Mhm.
okay, I mean, they are the third largest asset manager in the world. I think that, I guess it's been, quote unquote, priced in their involvement over time. Yeah, anyway, to your question, Sam, directly, like the blowups from last year, like absolutely are part of the maturation of this market infrastructure. I think you're going to increasingly see traditional players from traditional finance be involved in various parts of this. I think with the proper regulatory changes or clarity, you could see the traditional large custodial banks become custodians, right? Right now, they're effectively prohibited from custodying Bitcoin because of the Staff Accounting Bulletin 121 the SEC put out that requires that banks and public companies hold client custodied assets on their balance sheet, and banks in particular are subject to capital ratio rules that make it basically economically impossible for you to do so. So I think there's more maturation to come. But again, the fact that we're alive, that the market exists, that Bitcoiners are here stacking sats despite all that's happened, it's just that shock. I mean, they're truly. I mean, think about how many times the Peter Schiffs and Peter Zahans and have been wrong, right? Like, I mean, how many times
Mhm.
something is clearly going on with this Bitcoin thing, right? And I think a lot more people are realizing that. So you'll see maturity continue to increase over time.
Yeah, each time Bitcoin kind of rallies back up from the grave, it gets harder for these critics to not question their assumptions, right? I mean, the smart ones will start to question it, and the ones with maybe an ego will dig their heels in and just watch this thing rip again. But it's hard for people
It's
to
like that
see.
gif of is it The Undertaker,
Yeah,
the
the under
wrestling
yeah,
guy
the
when he's
Undertaker,
saying
exactly.
he's coming back up from the dead. I mean, yeah, I
Each
agree.
time, yeah, each time it happens, and it's kind of like, wow, whoa, this thing's back again. Like, we have to look at this thing now, especially as you say, like when you have these more credible institutions starting to be constructive on it, it's really hard to argue against it.